Let's go to banking and finance. Let's take a look, looking at 3 tier 1 banks in Nigeria, starting with UBA. The Afri-Exim Bank. So the Afri-Exim Bank half-year financials, balance sheet up 8%, $30 billion, loan and advances, 13% growth, triple-digit interest income growth, as well as double-digit net interest income growth for the Afri-Exim Bank. Of course, we've been talking about intra-Africa trade and that roadshow going to take place in Egypt later this year. Shareholder funds growing as well, as is their liquidity position. So that's the Afri-Exim Bank. Let's get to UBA now, United Bank of Africa. There we go. So gross earnings, triple-digit growth across the board here. Operating income, same story. Profit before tax and their profit after tax. We are going to talk about them along with Zenith Bank and GTCO. So Joshua Odebisi is here, senior research analyst. He covers the sub-Saharan African banking scene. He's with Rand Merchant Bank Nigeria. Thank you so much for joining us, Joshua. Good to see you again. Good morning. Let's start with UBA. What do you make of the results that we saw from UBA?
Well, I mean, it's just in line, similar pattern with Zenith Bank and GTCO so far. It's very, very strong, unrealized FX revaluation gains that's driving pretty much all the growth, although there's still strong core banking performance as well. But the truth is, because of the level of impairments that these banks are taking, without that FX revaluation gains, the results don't look as impressive. So the truth is that, of course, if you remove those impairments and the FX revaluation gains, you get a more clear picture of what's actually going on in the industry, which will tell you that it's pretty mild single-digit growth. But obviously, those FX revaluation gains on the back of the Naira devaluation have really driven significant growth this year.
Can we talk about, I think I've asked you this before, if we want to take a look at a quote from the MD CEO of UBA, where he's talking about their Pan-African footprints, and he mentions the new office that they opened in the UAE. So results demonstrate benefits of our longer diversification strategy across Africa and globally. Growth of our international business, most recently in the UAE, only reinforces earnings quality. I think I've asked you, but for the benefit of viewers who may not have heard your comments before, can you speak about the pluses of the Pan-African strategy, having a footprint across the continent for banks in Nigeria?
Well, the most important thing, obviously, is diversifying your earnings base. Obviously, having multiple branches across different countries on the continent and across the world means that you're somewhat isolated from economic shocks that may occur in different or specific areas. So what's going on in Nigeria now will affect the Nigerian book, but other parts of the continent will probably be a bit more stable, but they will also have their own challenges. But what this means is that not everyone will be suffering at the same time. So you can, prop up your earnings with performance here when the performance there is not as strong, and vice versa. Gotcha.
So you're saying, if you look at Zenith, you're saying similar story as far as their half-year earnings are concerned. It's a triple-digit growth, at least for gross earnings, double-digit for interest income, pre-tax, triple profit after tax. Same story.
Absolutely the same story. So like I said, it's all down to FX revaluation gains. But what we also have to keep in mind is the fact that these revaluation gains are just earnings on paper.
Right.
Because these are based on their assets, so things like the loans that they've given out are in FX denominated. And what it means is, obviously, when you change from 440 or 450 to almost 800, that's a pretty significant jump in the value of those when they're reported in Naira. And so that's just what a revaluation gain is.
Right.
So nothing has actually changed, but on paper, you have more assets than you did before.
Yeah.
That's really what it is.
Okay, cool. I won't make you repeat yourself, but same GT, just for at least for our viewers to see how they performed. GTCO, so gross earnings, same thing, 181% growth there. So similar story. Okay, since we've been talking about these revaluation gains, I want to ask you your thoughts on the central bank and the circular that they put out, basically saying that the bank should park those reevaluation gains somewhere and use it for a rainy. Help us out. What's this? Help us understand this circular and what they're saying.
Well, I think that definitely it's very important to clarify for investors and for the general public to understand. But I think that not much is actually going to change on the bank's front, because the truth is they were never going to come out and spend those gains, because again, it's not like actual money.
Right.
It's just valuation on paper. right? Now, what the circular is basically saying is that you cannot then, on the back of that, go and give extraordinary dividends to your shareholders.
Okay.
You have to put that into your capital to shore up and make sure that your capital adequacy is strong. And a lot of them are doing that already. Their retained earnings are going to be up significantly by the end of the year, probably, if things hold to the end of this year. So I think that it's just a clarification, more for the public really than for the banks, because no bank is going to turn around and start paying 10 naira dividend on the back of revaluation gains.
You see, thank you. Because, I mean, devaluations have been happening in Nigeria historically. Banks have been making revaluation gains and so on. So I really was kind of struck that this came out, but they haven't sent this kind of circular before, have they?
No, they haven't. But I think it was important to clarify because of the magnitude of the revaluation. I mean, sure, we've been having revaluations, and the banks have been smart enough to be net long on the dollar for a long time, like you said. So it was never going to be. It's not a new occurrence. But this level, this magnitude, all at once, all in one go, is unprecedented.
Yeah.
So I think it's very important to sort of temper expectations, especially for investors, to not expect that they will come out tomorrow and declare extraordinary dividends.
Gotcha. Okay. Speaking of which, so if that's the case, if you look at, and then the stock market has had two, losses last couple of days. We can either say it's because of the FTSE Russell thing or because of this announcement yesterday. But for whatever reason, if we look at the stocks for those three banks, I think UBA is up about 62% or 66% year to date. Zenith up about 50, I think. GT up about, they're around that range. So double-digit gains for the stock prices. So for outlook, is the financial services tier one bank still the pick of the litter when it comes to stocks?
Yeah, well, okay, so I'll split it into two.
Yeah.
On the one hand, you have value investors, people who are just looking for gains on the stock price. And I think that on the back of all the gains and the revaluation gains and all that sentiment, they saw significant improvements in their prices. But it's important to remember that these are more than likely one-off. This kind of extraordinary jump is unlikely to be repeated next year. And why that's important is because by next year, you're going to probably see a normalization of their earnings, right? Interest rates are still high. The MPR is still high. Asset growth, loan growth is not going to be so significant. So seen in the context of this year and what is happening in the balance sheet and on the income statements, it's very likely that there will be a return to normal next year, which will look like a bad result in context, which will probably lead to negative sentiment in the market, which could lead to sell-offs and could just lead to a bit of an erosion of all that. But the truth is that the fundamentals, when you strip out all these extraordinary occurrences, are still good. So if you're a value investor just looking for price gains, this is your best time.
Right.
But there will probably be a normalization come next year. But if you're looking at things like your dividend or dividend returns, chances are that the banks will be very cautious and will not overshoot or shoot themselves in the leg in the sense that they give too much dividend this year and go and give less dividend next year. I still think that they will be very logical and say, sure, there will be a bit of an increase, but it won't be so extraordinary that if next year things don't go the same way, we are not able to pay a similar or the same dividend at least.
Crystal clear, Joshua. Thank you so much. But a minute to go, real quick, Flutterwave, this swap platform, as far as, what do you think it can do for FX? Is it, are we putting too much emphasis on this? What do you make of it?
I think we'll just have to wait and see exactly what comes to light, because I'm not entirely sure how it will particularly benefit the wider economy as of yet. But I think that there's definitely a lot of potential there.
Yeah. Joshua Odebisi, Senior Research Analyst over with Rand Metro Bank of Nigeria, coverage of the banks across sub-Saharan Africa. Always a pleasure having you. Thank you so much for breaking down those earnings and giving us some foresight into what to expect for next year. Appreciate your time.